Hi, I'm Sue Bornhorst with NRI Relocation. We're here today with Mike Klug from Quicken Loans. Hi, Mike.
Good morning, Sue. How are you?
I am good. How's it going?
Good, very well, thank you.
Well, welcome to Chicago
Thank you,
and
the
in
Windy
the
City,
winter.
right?
I know, there's so many more fun places to be right now, I bet.
Yes.
But thanks for being here with
My
us
pleasure.
today. We wanted to ask you some questions about the buzz around new government regulations in lending, particularly with transferring employees. So
Right.
can you tell us what you know about what's going on right now?
Right, well, what I know is it's not the same market that it was last year or the year before that. Dodd-Frank has put in some new regulations that went into effect January 10th, 2014, that will change the qualifications necessary to purchase a home. The most important, I think one of the largest implications is the new debt-to-income ratio that transferees will have to have, or anybody for that matter purchasing a home, will be required to have a 43% debt-to-income ratio in order to be able to qualify under the new regulations for a qualified mortgage.
Wow, great. And what else is out there ahead for us?
Well, again, with the regulations changing and the qualifications changing, certain things that might have been applied before to be able to be used towards the purchase of a home may or may not be eligible, whereas in the past they might have been. Certain things such as subsidies that individuals might receive or compensation they may receive from their company may or may not be able to be applied towards the purchase of their new home to qualify them within the ratios of 43%.
Will that affect a large portion of the transferring employees, do you think?
It'll be interesting. The overall population as a whole, transferees or just regular people purchasing a home, it is anticipated that about 20% of people that would be looking to purchase a home will be affected and may not qualify to purchase a home. So it's significant.
Okay, something to keep in mind, definitely.
Right.
What about the new appraisal timelines?
So one other important feature that is going to be in play is that lenders are required to send out an appraisal 3 days prior to closing. So once that notification is sent out to an individual purchasing a home, once they've acknowledged receipt of the appraisal, they have 3 days from which that acknowledgement is done to confirm the valuation on their home and send it back to a lender to be able to close on their home. So that is something that is new as well. The one thing may or may not affect the timeline from a closing standpoint. So it's important, and it'll be important for anybody looking to purchase a home to stay on top of that and make sure that they're holding up their end of it from a timeliness standpoint so the lenders can close on time.
And I understand it's so specific that it's when you open the attachment.
It is. So it's not from when the lenders send it out, but it's actually from when the individual acknowledges receipt of the appraisal form.
Very precise.
The timeline. And then it's 3 full days after that they have to verify that, yes, this is the home I'm purchasing and I believe this is the value of the home before it comes back to the lender and they can close on their home.
Yeah, so that kind of gives you a tight timeline.
Yeah, and again, it's different. It's just a different time than it was a year or two ago, and so the most important thing that we continue to stress to everybody is be proactive, be involved, and keep open lines of communication with your lenders and everybody involved with your relocation.
Great. Well, thank you so much. We really appreciate you coming in
My
and
pleasure.
visiting with us today and giving us some good information. Please check us out on Twitter, LinkedIn, or Facebook, or all of the above. Bye.